Namaste and welcome to Pods by PEI, a policy discussion series brought to you by Policy Entrepreneurs Inc. My name is Tedon Konsakar. In the next episode, the second of a two-part series, Soumitra Nupane, Executive Director of PEI, sits with two guests, Anup Upreti and Shreejesh Ghimire, to discuss the lessons from successful and not so successful experiences of infrastructure project financing in Nepal, and outline policy priorities for building an enabling environment for future investment mobilization in the country. Anup is a legal expert who regularly advises clients on diverse transactional matters ranging from foreign investment and project finance to private equity. He is the managing partner of Pioneer Law Associates and specializes in financial laws, foreign investment, private equity, and capital markets. He holds an LLM degree in banking and financial laws from the Queen Mary University of London. Similarly, Shreejesh is the Chief Investment Officer at NMB Bank Limited and was formerly the CEO of NMB Capital Limited. Shreejesh is an MBA graduate from Kathmandu University School of Management with a specialization in finance marketing. We hope you enjoy the conversation.
Welcome to another brand new episode of Pods by PEI. This is my second of my two-part conversation with Anup and Shreejesh. If you haven't listened to the first part, I would request you to all listen to it. Now, welcome back, Anup and Shreejesh. Welcome, guys.
Thank you.
Thank you.
For the next part, I want to engage you both on very sector-specific discussions, right? So the idea is to kind of reference what has been happening in Nepal with regards to project financing, successful cases and unsuccessful cases in different sectors, to make observations on what has worked, what have been the critical issues, and where have been really touch points when regards to project financing in Nepal. And it is only fair that we begin this discussion with all of our favorite topic, hydropower, right? This has been a sector that is very aspirational on the Nepali development and growth story. And then it is also a sector, despite several constraints and challenges therein, but this is a sector we've seen a very diverse flow of investments, right? So let's begin the conversation with hydropower. And the first thing that I really want to point out to start off the conversation is going back in 1990s, foreign investment, two specific projects, Botikoshi and Khimti.
So late 90s, project financing was done, purely private-led financing. That was, I think, first privately financed project in Nepal.
That too foreign.
Both equity and debt also foreign. And what is the controversy now or few years back? I think with those projects, two aspects. One, this was dollar PPA.
Anup, just on this, I mean, the concern with dollar PPAs was that the dollars were escalating and then that led to more financial losses, right?
Yes. At the time when the PPA was signed, dollar as what at one rate, and then it changed to a very different level. And that created more obligation for NA when you talk from NPR perspective, because NA was earning money in rupees. So at one time, entire blame of NA's financial situation was put on both of these projects. There was parliamentary hearing. These projects were called into parliament and asked why the currency...
The utility is suffering
losses and why the PPA price should not be changed. The lesson from there is one big factor was, will Nepal really open up a contract after signing it? I think that's a really big message. Is Nepal really willing to honor the contracts that they have signed? Now, if it was poorly negotiated, or we need to look at from the perspective of these projects were correct at that particular time. If PPA of that nature was not signed, probably they would not be able to raise the financing. So, we tend to forget in what context, at what situation financial closure was done, what kind of agreements we've signed with the investors.
Interesting that you mentioned this point around there was a really point of departure where sitting now we're thinking whether at that point in time Nepal would honor the contract. From there, today we've moved into a process that requires really stringent contract management process, right? And then really wanting things to be written out. So has that contract management process really evolved? And is there confidence that that contract today is going to be more honored?
I think so. It's just in those projects, nothing has happened enough that sense, not honoring the contract. While that might be in the back of the mind, but NE has not breached their contract. So that's really good.
Now, what about what this translates to interest for new developers coming in, especially money coming in from outside and wanting similar preferences for dollar treatments for the rates in hydro?
The Nepalese commercial arrangement on PPAs have really evolved. Today, if somebody is expecting PPAs like Ghimire and Botikosi, that's not going to happen. And rightly so, because Nepalese hydropower development is at a very different level as compared to when Ghimire and Botikosi were negotiated. While at that time we had to give certain assurances to foreign investors, now market is more mature, foreign investors understand. That's one thing. And now the few things from an investor's perspective, expectations, right? So the most recent, most bankable project Nepal has signed is Upreti. A lot of DFIs are lending in that project. Government has signed a concession agreement, which says a really bankable document. Now the issue is government has not extended same kind of bankability to other projects. So I think, from a policy perspective, to sit down and understand and discuss, okay, this is the risk allocation in our concession agreement and government side will do this. And let's continue that arrangement for next 10 years, for example. Because when investors are looking at, they all are going to look at a potentially project development agreement, and that, expectation management probably we should still do to give confidence in this sector.
Let me get this straight. What you're saying is that for somebody coming into the sector, they should not be expecting some level of treatment that a project has got, right?
Not in all respects, but fundamental respects. Let's say, what is the role of government to guarantee NE's default, for example, right? I think Nepal needs to move away from DFI's financing to more real commercial financing. When that happens, change in law protection, any payment guarantees, how are you going to deal with hedging? Force measure, how are you going to allocate hydrology risk, for example? Those kind of risks probably should be consistent, because we are giving a message to foreign investors saying that our concession agreement would look like this with this risk allocation for next 10 years. I think that's very important. Rather than we having to negotiate with the government, already settled point now and again, and advising the clients, for example, hey, this is the template of last document, last transaction, but this may not be continued for you. That's not really a nice way to look at, infrastructure financing.
So just on this conversation, so the 1992 Act, Electricity Act, was really important for mobilizing the domestic private sector, right? And that was really timed with the liberalization process, the banking sector coming in. And today, the Nepali banking sector is quite heavily invested. There is a requirement, I believe, right, from the central bank that at least some amount of funding is going to the deprived center, including hydropower. And your bank, I think, is leading that process among other banks. As we are on this process of talking about bankability, enforcement, especially with international financial institutions or financial investors, how does this translate to how the domestic financing sector looks at this issue?
See, for domestic financing, relatively the policy consistency is easier in a view that the PPA agreement is done prior to financial closure. Or at least there is a precondition that there will be a PPA for any drawdown, even we do a financial closure. So NEA also asks for an in-principle financial commitment that there will be a financial closure done. Having said that, NM itself has almost 600 megawatt worth of investments in the power sector. Out of almost like 45 projects that we finance, we lead around 30 projects. So,
and you guys had a special bond, right?
Energy bond that we raised in the local market. For those banks who don't have that expertise, who are not fully on the hydro sector, they can at least meet the regulatory requirements. So Botikosi, Ghimire, apart from the escalation clause, one of the most important was Probably at that point in time, whether the hedging was not readily available, or probably any never thought like, no, you need to cover the hedging risks. So had at least the hedging risk been covered that we discussed in UT1 today, or like any other projects, foreign capital that inflows, probably a large chunk of NPR depreciation cost would have been saved for like some amount of like an annual hedging cost. So coming to Tamakosi, like we did it like, completely from the domestic fund, largely government-backed institutions. We started at $35 billion. Like that is one of the flagship national priority project and one of the more bankable kind of project. But by the time we did a financial close to almost near about 50 billion, we reached almost $80 billion there. So probably on a Ghimire Bhutekosi side, we lost on the revenue, or like we had to pay a higher, because of the dollar PPA, we paid a relatively higher amount. But today, if you see the Tamakosi, like since the start, there are, in fact, like in one of the forum, Kulman Kishing, he categorically said, like, we'll not do the mistakes that we have done in the past, like in Tamakosi or like in Bhutekosi. Like we've covered up a lot of things and we've already factored those risks for the bankability of the new project. But why did Tamakosi, we could not see Tamakosi from a $35 billion expected project cost to $80 billion, more than a double. So in many of the private sector, the DDA component that we do, the project viability component that we see, the bankability that we see is like very rigorous. Any kind of infra project, there is a risk of time and cost overrun. But what amount of contingencies and what amount of risk that we've already covered while doing the due diligence is one of the most important factor. So yeah, like the banks, private sector banks, I talked about efficiency. They have really gained the efficiency in these. And many of our projects, like our NPA rate is less than 2% in 45 projects that we have financed so far. So that itself speaks that like non-performing assets, or the projects that have really gone bad. And these are like relatively the small projects that we did in the past. There are some hydrology issues and all. We take that project, that is inherent. But largely those risks are covered prior to financing, and then they become bankable.
I think it's very interesting to contrast here with how local banks are doing and how foreign lenders are looking at the similar situation. So local banks, they don't bother about concession agreement in place. So whether the developer has signed a project development agreement with government or not, that's not really part of the requirement. Secondly, there's also no risk analysis of any default. There's an implicit feeling that any will never default. If that defaults, government is going to pay. That's where I think clear departure between domestic financing and foreign financing is there. Foreign lenders will see this as a project risk, but local banks are not really seeing this as a risk.
Meaning that at the domestic financing space, that risk appetite has expanded due to increased capacity, things like due diligence, or
not only that, like we take any as inherent risk because it's somewhere connected to the sovereign, that we are taking it like as a home ground advantage. For a foreign capital that flows in, they take any as possible default as a risk, whereas the perception of risk for the purely Nepalese financing is any defaults that is a default of Nepal government. That possibility, in fact, we ignore as that's part of inherent risk, because if you don't trust a sovereign-backed institution that it will pay back, and as a monopoly buyer or the most important utility. So yes, like rightly said, this is the point of departure.
And this is where we struggle, when we are representing foreign lenders and going and discussing with any or government and saying, all the local banks are financing. Why is it a problem for you?
Again, one more thing. Even there is a hedge. We finance in a home currency, and all the revenues are in home currencies. So basically, there's a auto knockoff, or like the transaction is squared off. So for a foreign lender, like bringing their USD or euro or whatsoever, the foreign currency, and taking a risk in a local currency or a local enterprise is a big.
As we continue from Ghimire and Bhutekosi, it looks like there are specific projects that are really important in discussing financing hydropower, right? So the second project that comes to my mind is Ghimire. Right? This was a very unique model and has really changed the landscape of infrastructure financing, especially on the hydropower side. Your thoughts on Ghimire?
I think for me, when somebody says Ghimire, employee share scheme and local shares. They've really involved the entire community and local population in their development. So I've traveled to those locations and really trying to understand, whether issuance of shares and local shares, project affected population would be benefited or not. I think Chilime is, from that context, been a very good example. The only difference there is they issued the shares to local population after they completed their projects. All the risk was mitigated. After that, everybody looked at Chilime's success and everybody wants to invest in hydropower company. And a lot of discussions that time was investment in essence is really a risk-taking endeavor. And then, when you have a local population also investing there, and then if the project does not really do well, then that's going to create another problem. So I have one example. When we are doing survey with local people, so there's one person, telling us that he wants to invest 5,000 and in the near future he wants to buy a motorcycle. So that's kind of an aspiration or a misinformation that has happened, all because Chilime was doing well. And I'm not to say that investment opportunities should not be there, but these are inherently risky proposition also. And then also I think now in our constitution there's already a provision that you have to involve local population, give opportunity for investment if you're developing natural resources project.
You want to add anything to this, Shreejesh?
Even for the developers, it gave a kind of respite or kind of confidence that we can raise some funds from the capital market. We can raise the equity from capital market. But again, government now saying like Nepal ko pani janta ko lagani, or somewhere or other selling the dream. And again, like through capital market means like not through the dividends. You're looking from the capital gain perspective. That is pure speculation. But again, if you are really thinking those are the affected populations and their livelihood has been challenged because of the project, the real narrative is that. So you want them to participate and get some benefit out of it. Is this the right way? Normally, the risks are always taken by the entrepreneurs. So you're taking a project risk with a view that someday the stock prices will go up and you will benefit. So again, I don't want to speak much on this, but I have a big debate whether this is good or bad. But on the other side, since the investment size because of this has become very, very small, like, a lot of participation, we can see from the locals, we can see from the public sphere, because the participation, that concentration has been like diffused to a very large amount of audience. Somewhere or other, it has helped on the financial literacy as well as banking and the investment habit. So if we are talking from the purely social perspective, probably we jumped to investment kind of literacy, from financial to investor literacy, leapfrog kind of jump through these kind of IPOs and share allocation. But whereas from a return or an economic perspective, I'm still skeptical whether this was good.
The next project being Tamakoshi. I mean, Shreejesh, you briefly touched on this. And Tamakoshi, bang on, 456 megawatt, Nepali finance project, the largest till date. There are major learnings there. One thing that I really pick up from this is the financing reliance on public funds, right? Even today, if you are to build a large project, everybody is looking for public funds, besides other forms of domestic capital. There is no other leverage but public funds. Almost looks like, I don't know if this is true, but you guys being in the sector probably best understand this.
Tamakoshi project means, I think, two things for me. I've visited the site and I've seen the real development that can happen in rural sector just because there's an hydropower development taking place.
That's an excellent point.
And I really liked it because otherwise roads still there would never be constructed. And, employment creation, skill creation, the local villagers are working in the canteen, they have trained for chef. Those kind of social impact, like positive side is also there. Second point I'm a little worried about in this kind of a project model is this public finances, EPF and other like who have invested there, they've invested without really doing a due diligence on the project just because it has to happen. And, there are no typical lenders kind of a mindset in really lending, which is not really great, because if that project were to fail, then our institution is going to bear that particular impact.
Yeah, the public funds have already been used, but if this is the right model or not, these are all perpetual institutions like CIT or EPF. These are government institutions, but these are the institutions which are there to protect the retirement of the people. The public funds is not like a very risk-taking kind of fund. This should be a risk-averse kind of fund. So had there been an involvement of a private sector or probably a foreign equity or a debt partner, the story would have been completely different because the DDA would have been much, much better. And also for the public funds, like the initial sponsor equity shareholders are the lenders as well. So unless you really have a very strong China wall to evaluate from the equity holders' perspective and the debt holders' perspective, you're technically stuck because of conflict of interest. Because your equity is technically stuck there. You're already into a project. There's no point of return from once some investments have happened. And you're also a lender as well. So if you don't complete the project, it's a sunk cost for you. So you have no choice than to keep raising the debt. So today, one of the reasons why Tamakoshi is raising the rights here is like they've said two purposes. One is to reduce the debt because the loans will not be serviceable with the revenues they're expecting. Second, again, to run Tamakoshi reliably in a better sphere. They're adding a role walling. So, rightly said, Tamakoshi, had there been a strong due diligence, had there been involvement of private sector, could be a foreign lender, then it probably would have been a very different story.
Hi there, this is Tedon Kansakar from Policy Entrepreneurs Inc. We hope you're enjoying Pods by PEI. As you may know, creating this show takes a lot of time and resources, and we rely on the support of our community to keep things going. If you've been enjoying the show and would like to help us out, we'd really appreciate it if you could become a patron on Patreon. Patreon is a platform that allows listeners like you to support creators like us with a small monthly donation. Your support will go a long way in helping us to continue creating high-quality content for you. So, if you're interested in supporting our show and becoming a part of our community, head on over to Patreon and become a patron today. You can find us at patreon.com/podsbypei. Every little bit helps, and we can't thank you enough for your support. Now let's go back to the episode.
But the next project is, I wouldn't say it's a project, but really a timeline of events. The timeline of events from the exit of StarCraft, right, the Norwegian fund that was supposed to develop the Tamakoshi 3 project, to now having several Indian investments, Chinese investments, showing interest, some developing already project, and some recently awarded project. What has changed?
Probably for the Indian investors, since Arun 3 is now very near to complete, very close, they got a lower Arun as well. And because the power trade now gradually, at least with the slow growth, it's growing. And a lot of transmission line being connected to India in deep need of power. Probably there is a realization from both ends that Nepal's potential somewhere other can also be utilized for India. And also that the most developers today, Indian developers, are the power sellers as well. So that's a big advantage for them. So they develop themselves and they transmit and distribute power in India themselves. So because of that also, the Indian narrative, I think because of the power trade that has started is something that is helping to change the narrative that some projects that were not bankable yesterday could be bankable tomorrow.
This is interesting element of connectedness between market and geopolitics that I observe in how this trend has evolved, right? So when StarCraft left, there was no confidence where they could sell the electricity. So they were just holding on the project. So the market was not there. Power trade with India was not formalized. So they didn't see any point to continue, right? To the point now where at least there is a clear market and then there are some policy instruments put in place and then some quantum of power is flowing between the two countries at a commercial scale. The fact that it's also indicating like really what kind of investment preferences there is going to be if Nepal is to develop hydropower, right? For example, the fact that we haven't been able to put Tamakoshi up into the Indian market, we've not got any entry. The Tamakoshi has not been granted entry into the Indian market because of some Chinese footprint, right? Just thinking this loud in the sense that if Nepal is to look for foreign investments in the hydropower space, then it should look beyond Chinese investments because then if there is a Chinese investment element, then that potentially restricts our market into India.
As Nepal develops its projects, we need to have a mix of basket of investors. Koreans are doing it, Chinese, we have Indians, and maybe other investors also we need in that particular mix, because different kind of investors can raise different kind of funding. Like say Arun 3, why it is happening? Because it is state-owned enterprise. It has a very easy access to commercial financing. Exim Bank is lending. So those contexts. So I think ultimately, who is the investors? What kind of financing they can bring is really important.
The fact that we are now increasingly engaging with larger firms on larger projects, right? And this is an interesting proposition because some of these are storages, right? And we've, as a nation, not been able to develop storages, and that is some of our need. But when you're developing storages, you're faced with, beyond financing, there are many different types of risks. How do you guarantee a business environment when they're working with large storage projects, when they're working for something like the West Sethi?
You brought up West Sethi, very interesting, because from early 1990 when the first PDA was signed, we've seen, Australian people coming in. We've seen now same project, Chinese coming in, and Three Gorges were quite seriously looking at it. Did a lot of negotiations with NE also. But then ultimately that did not happen. I think there are two things happened in Three Gorges. In West Sethi project, when they backed out, one was they had to bring down the size of the project. So from 650 to around 430, and politically it did not sit in well because...
That was the narrative.
That was the narrative. 650 megawatt. You can't touch this, Whatever technical will say, financial will say, that's the project. And second clearly is, with the rates that was there in the PPA guidelines, probably that was not sufficient enough to really cover the, returns. Now, when we talk about these storage projects, I think innovative financing is probably needed. I think there were some discussions around doing this in a really hybrid model where dams are developed in a more public concessional financing and more project assets of hydro doing more with the private financing. I think...
This was in the Nalsingad case.
Yes, these were discussions, but maybe those projects, West Sethi, I think that needs to be looked at.
This last point on investment in the hydropower sector, something that is really constraining the sector is investments beyond generation, right? And that is a significant portion of investments. How do we source financing for transmission and distribution?
I think again it goes back to bankability. How do we make these projects really bankable? I think currently there are 2-3 issues in Nepal. So NE's unbundling has been discussed. So what's going to happen there? Second is in terms of transmission. How do you bring in, regulation around transmission, wheeling charges and so forth? Those policies are also not there currently. And third is, can we really attract investors to really invest in transmission projects? Once we have enough energy, developer would probably prefer relying on the transmission company than building their own transmission line. So I think we need policy clarity around that, and it be bankable as well.
So just as a banker, is policy clarity just the thing for banks not to invest in transmission and distribution?
Just two things. Like one, so where is the market? So we talked about by 2030 will be around 6,000 megawatts of power. So this year itself, there's a big question if NE has to spill a lot of energy during the wet season, their balance sheet would be on a sheer stress because there are several PPAs that they need to pay for. So second, again, it comes to the markets. If post-generation, if the developers can directly reach out to the markets, whether to sell in the Indian exchange or some industries, then it's something way back in early 2000 when the private sector started hardly over 2 or 3 megawatts or 1 megawatt. Today, you talk about 10 megawatts, there are hardly any projects developers are interested in building 10 megawatt. Everyone talking about 25, 50, 100, 250 megawatts of projects. So transmission line as a component to distribute the power, the banks will finance, and various models can be explored for provided there's a clear energy market that this will be sellable. And the revenues are the primary components to justify that these transmission lines are also bankable.
Well, I think we broadly agree when we're discussing hydro that there are, despite several challenges and constraints, there have been really good elements of success, right? We've innovated, we've been able to draw investments, we've muddled our way through different challenges. And here we're discussing complicated financial instruments, different types of investors coming into the market. Largely can be seen as success. But let's move on to another sector now, right?
But before you move on to other sector, just closing this discussion around energy, hydropower, I think there's an important element to say that when do we say let rivers be rivers? Because when do we stop exploiting these rivers? Hydropower.
Really, that is not the case. We have a potential of 83,000.
No, we have potential of that, but at what cost? I mean, if you see now on a project size, you drive few kilometers, you will not see water in these rivers, So I think it does have
This was my point when I said that does climate change give us that pivot to think about how we want to move forward? Excellent. This has been a good conversation on hydropower. I think there have been many learnings. Moving to not so successful investment or questionable investments, right? And the thing that I can think of that can provide best examples for us to draw learnings for charting a way forward is connectivity, right? A sector that has received some investments, but really interesting investments. And the first thing that I want to put out for discussion is airports. We had the Tribhuvan International Airport that was really commercially very viable and stuff. And then there's always this narrative about building new airports. And then very simultaneously, we built 2 new airports and both are not functioning well. And there's this policy discussion around building a 3rd airport in Nijgat, right? And this really brings the discussion back to what you had raised, Shreejesh, initially. Do we really finance need or do we finance aspirations? Your take, guys, on this.
So, what kind of commercial study or due diligence were done for the Lumbini or the Pokhara airport? But meeting the entrepreneurs, their big hope was as a connectivity with the international flights. There will be the hotels have come, there are a lot of infrastructures have come, but that is not happening now. Gradually, from a tourist destination, somewhere we are looking into diverting the flights and making it a labor destination. Connecting to largely the Middle East and the migrating labor population. So, whether these were feasible investments or not, I really don't know. But again, projects like these, like airports, like bigger projects, which have a very long-term payback periods, it would be too early to say whether these projects are good or bad. Probably 3 years or 5 years, 7 years down the line, it might convert to a good airports. But again, having said that, these kind of projects for a country like ours, where we need a big chunk of capital to grow, so we don't have choices to burn out capital in experimenting things. So probably this kind of projects, if it comes to a larger public debate and the government clearly spells out the intention as well as the transparency why this is being built, including the contracts on a public sphere, then probably it will have a wide public acceptance, and also it helps to decide not only just EIA or financing norms. So it gives a clear message that what actually we need. This is an aspiration or this is a need?
There's a good learning from what happened in Nijgat. When Supreme Court gave its decision in Nijgat case, so fundamentally 2 things. One is the environmental impact assessment study was really didn't meet the criteria of how it was done. So that is one. And second, Supreme Court in its decision has indicated government has failed to really distinguish between aspiration and need. So if government had done its plan and done project like that would be the 3rd biggest airport in the entire world. So the point was, do we really need such a big airport? At the cost, it's not only money, it's the cost of environment.
The point of reflection for me with the 2 cases, Nijgat, Anup really pointed out the concerns there and whether we should be moving forward with Pokhara and Bhairava was looking at Nepal's own process of privatization and negotiations, right? You rightly mentioned, do we really prioritize airports or we prioritize something else? And do we really have the power to negotiate with those providing financing, right? Just because somebody wants to come and finance, do we really allow them to finance anything else? Or we could tell them to put money somewhere else on some other projects where we need the most, right? For example, ADB financed the Lumbini airport, and we could have asked ADB to do something else, right? More importantly, I mean, there is a concessional element, yes, but we're still paying for it. Similar case with Pokhara Airport is that there is a concessional element, but the fact that money is so hard to come by, when there is money, how do we really prioritize that? And the fact that today we're discussing railways, moving from airports to road, and this is one project that came up in our earlier discussion, is the fast track connecting Kathmandu to Nijkhat. And there are some serious lessons there, especially on project procurement and the opportunity costs. Your reflections.
So the narrative coming in the press just before signing the contract is our concession agreement has granted revenue assurance for the developer, right? So, it's as part of the bankability and context. And there are a lot of opposition to it. If we have to guarantee this, why can't we build ourselves? It will be cheaper. Why do we pay more money to foreign developers or private developers? And I think that's where our thought process is wrong, if I may say that, because if we are going to invite private sector players to develop infrastructure projects, if we were to meet that 15th-year plan, and how many kilometers were there?
33,000 kilometers by 43, 44.
Yes, so how are we going to build it? So I don't think the public finances should be solely used for infrastructure like roads, where there is a better alternative, where consumers using those roads are going to pay for it, and there's some developers going to come and initially invest. I think here the important lesson is, as a country, we should be very confident in designing our system, designing our policy. If we say, this is how we're going to do toll roads, we're going to give revenue assurance again for a defined time period. I think because it was not there was lack of confidence with all of those people at policy level, and they did not go with that. But I think this has been a very important lesson as far as policy's perspective.
Also from the typical, very finance kind of perspective, we need to set our priorities, like where we want to deploy our domestic capital. We've agreed that we have a very limited capital to deploy at the domestic capital. So where do we want to deploy? Do we want to put it in healthcare? Do we want to put it in education? We have like multiple priorities. We have to build roads. We have to reduce the mortality. If you see the list, it's a long list. So the roads or the energy or these kind of airports will demand a huge chunk of capital, and that also carries the risk. So the first story should be setting up a priority of use of domestic capital so that you free up the domestic capital, invite the international community to take the risk, and you give some kind of assurance. One. Number two, some way we need to migrate, or we need to leave that national kind of perspective that yes, any investor would come for profits. They are not here to develop Nepal. But their investment will help us to develop. So it is not their objective to develop Nepal and they go empty-handed. Their objective is they will come to Nepal, they will build the infrastructure, earn something so that Nepal develops. So again, rightly said, I also remember reading in the press what the Indian developer, I think it was an Indian developer, ILNFS, probably 110 billion rupees, roughly. Yeah, roughly 110, 115, if my memory is fairly correct. Since the projections were for the Nepal government, so what they were asking is you just need to guarantee the number of vehicles that will pay the toll. Like you need to guarantee the number.
I think very interesting context with this is, if you've gone from Thankot, they take down all the names and how many vehicles, but I don't think so this data is anyway available. Then how do we forecast if there's no proper data of how much traffic is happening? It's again, when projects like this is designed, you have so many uncertainties, and you do have to rely on revenue assurance.
That's a good point. I just want to add one point to this conversation, and this being internalizing opportunity costs. If we had locked in on that developer for that cost, potentially that project would have been already completed, right? And then that would have led to so much saving and convenience that future cost is never internalized in a process and thinking and financing decisions around infrastructure. Unfortunate, but I think this is the case. Just an addition from my side. Moving on, I mean, I see investments really transforming in a few particular sectors, right? This is mostly in the FDI sense. So cement, hotel, ICT, right? They're really sectors that are showing significant traction to draw foreign investments, especially. How are you guys observing the growth?
To begin with, on the cement side, like at one point in time, yes, there's another story that like cement industry is in highly overcapacity. They're bleeding on the cash flows. They're bleeding in the profits for this year. But from the development perspective, cement and steel as the main two principal commodities, like, without those two, you just cannot even think about the development process. You just need cement everywhere. When Hongxi came, a lot of criticism was there.
Hongxi is the Chinese company.
One of the global players. In a local front, there was a big criticism that for a 6,000 TPD plant, the cost was significantly higher than the Nepalese entrepreneurs were building up. So Hongxi story was very interesting as their first story is cement is a commodity. It's very difficult to make it a brand. So as a commodity, you always, it's like you have two stories. One, you need to rule the market. So it's also called the bulldozing industry. Globally, cement is called the bulldozing industry. And the bigger player sets the price. One. Number two, you need to have the cost advantage, not on the margin side, because there could be another big player who could bulldoze you. So you always need to have a cost advantage so that you can price it and you can get the good amount of market share. So Hongxi came with the latest technology. At that point, there's a big criticism that like Hongxi is highly overpriced. You don't need so much of investment to make those kind of cement plants. But when Hongxi came into the market, they set the price for sure. They're one of the biggest clinker manufacturers. They set the industry price. The cement price was already reached probably 1,000 rupee plus for a bag. It came down to roughly around 650, 700. So MNC is coming, bringing the technology as a consumer. And on a development sphere where cement is one of the principal component of the development, imagine the amount of cost that has been saved by whether you call it hydro, whether you call it hotel, you call it roads, even the normal house that we make. So they set the price. And a lot of the new players then post Hongxi started implementing the new technologies that they brought. Now again they are into a forward kind of their expansion. Just to have the cost advantage, they are also looking into other kind of expansion. And maybe the Nepali manufacturers will also. So today, like one of the commodities that we are looking to export in India, if there is some kind of government subsidy, is cement.
There's an 8% something, right?
Yes. So why we've been able to export to India is our production cost has significantly calmed down. Come on, like the coal prices have jumped almost 3 to 5 times. From almost $60 to $80 to almost $250, $300. Now it has slightly calmed down. But even at that period, 1,000 rupee a bag came down to almost 650 to 700. So if the government subsidizes some portion, we are able to export to India. Like had we dreamt probably 5 or 10 years before that a cement could be exported to India? So bringing the international players, the MNCs, they really set up a system. It applies almost in every kind of business. Like
whenever same would apply for hotels, bringing in a quality of service with an international.
Today with the Marriott managing the chain, almost all the new hotels that are coming, they are signing up with its Meridian, with its Hilton, whatever you name it. They're doing a management contract. So Nepali developer is building the hotel, whereas the management contract is given to the group. So this is bringing up the technology, the skill. A lot of skill transfer has happened. So for this, unless we open up to the outside world, the investment as well as technology, it will be very difficult for us to, even in the banking sector. So the credit always goes to the Standard Chartered Bank, the early movers, they taught us that, there's a narrative that because of a lot of people, the early generation of Standard Chartered bankers, when they came to a local bank, they set up the risk precedents or the risk story or the risk process policies. And in fact, even they also help the central bank to devise a lot of risk policies. Even today, for any of the new policies, they are the banks where we go and discuss. So bringing the foreign investment, bringing the multinational in the sphere, definitely. And cement has, again, it has been a very good experience.
Hongxi, they came in without any special privileges or anything else. They just came in because there was an opportunity. There was no special privileges that were given to cement sector. I wanted to touch on the IT sector now. We have younger population, English speaking population. So the thought process has been there in IT sector. There's a lot of potential. So we also interact with currently a lot of startups and a lot of companies really building their cost centers. There 200-300 IT engineers are here, and they're serving foreign clients into that. So huge potential on that. So one example is government recently introduced 1% income tax on foreign currency income for in IT sectors who've done in business processing, outsourcing, and so forth. So
meaning that if you were to receive funds for your services, that would be charged 1%.
1% income tax, right? So on the surface, such a great policy, and I would assume the idea is to really promote more and more expansion in Nepal, more and more in or maybe when people are choosing the destination, where do I set up? Initially we discussed. So should I go to Vietnam or Nepal? Oh, Nepal has 1% income tax. Maybe that's a good reason to come in here. On the surface, it looks like it, but there are two, I think, principal issues with that approach. One is they've given 1% tax rate without any time-bound process. So a foreign investor would not know when they're going to take it away, right? So there's no certainty when I have to plan and I have to choose between, let's say, Vietnam and Nepal. If I have to choose Nepal for that 1% reason, I need certainty. So that certainty is not there. Probably new budget is coming. Government can now look into it and say that, okay, we're going to give it for 10, 15 years, right? So that's one. Second, what is happening is instead of more funds or more business coming in Nepal, US entities are then giving contracts to individual employees. So now you have money really not coming into company, but now contracts have been changed so that US entity, for example, would have signed a direct contract with the employees. And that's a savings on an employment tax. I don't think so that was really the intent. And it's been used for a different context. So I think when we're implementing policies, we need to look at what are we doing that for, and really, if you want to shift these setups from other countries to here, definitely this needs to be really.
So the intent was for the companies to come here
and
then
expand
run the business and expand. Whereas what happened was that it's just a payment arrangement facility.
There's no expansion happening, and the structure is changing, and tax is been reduced. So instead of employment tax, they're not.
I'm pretty sure the government has taken notice. They're losing revenue.
No, I hope so. But what we want, a policy shift of that importance in nature, is going to increase FDI. So where is the FDI coming? We want, ideally in IT sector with this, investment should increase, headcount should increase. From, let's say, Vietnam, people should be shifting their centers here. So I think that's important aspects to kind of look at in that sector as well.
Anup, I'm really enjoying this in-depth conversation on financing, development, and growth. And as a host of this episode, it is my responsibility to also engage you both, draw from whatever we've conversed today to kind of chart out a way forward for Nepal. Draw some learnings for what we need to do next. Shreejesh, I think it was you who pointed about this idea of mindset and perceptions, and you coming as a representative of in a private sector. How do you see the mindset on private sector and profits changing? You mentioned that there are challenges there, but given that Nepal's financing landscape tomorrow would necessitate a larger role for the private sector, that mindset really needs to change, right? But how do we really move that forward?
The first mindset story, I would say, is like from the bureaucracy and the government side. Please listen to the investors, listen to the private sector, what they're looking for. It's not like we set a rules that are suitable for us rather than the investors. And somewhere there is a very strong narrative that we call it a nafa-khor. Nafa-khor is kind of it's like a curse, like what, you're making profits. When it comes to profit, there is a serious negative kind of connotation or mindset and entire, like wherever you go to a bureaucracy. Second, I would say, please go and shout out, this is an investable country. Like, we will help you to get profits. Like, we'll give you the best of the projects. Like, you make profits. I just want to say, you want the investors to come and help Nepal to develop, or because of their investment, Nepal will definitely develop. So if you think they will come to Nepal when they invest and will develop, so they will take some profits, then our journey is relatively easier. We always try to, reach out to them. So what I'm trying to say here is, if we really want to grow, we need to accept first that whoever is coming to Nepal and invest, even a private sector, they will not coming for the profits.
And they should make
profits, because the profits will help to earn the efficiency as well as the competencies.
Just as you were responding to this, something struck my mind. And this thing is, it is also a reality that we need to accept that not all private sector entities are the same, right? And then some of that mindset is also influenced by how private sector itself is engaging in the investment landscape, right? So do you see the need for even private sector to change, for that mindset to also change on how the government or the bureaucracy looks at private sector and profits?
See, it's kind of a chicken and egg scenario. So who is the trendsetter? So I think the industry normally follows the trend. Let's simply make it like India probably 10 years before, or 15 years before, even today. Even the political parties who really look into from the development perspective, they clearly shout at we need to leave the Babu's culture. So they categorically to coin the term as Babu's culture. That's basically somewhere hitting the Indian bureaucracy. So you need to help the private sector grow. So unless that happens, we nobody's going to grow here. So help the private sector. They have the resources and they mobilize the capital. Government needs to facilitate. Here, if the political parties as well as the bureaucracy, when accepts we need to facilitate the private sector automatically will, they need to align. They don't have a choice. So for me, see, private sector is though organized, but they have their own interests, whereas government as a body has a common interest. So if the government machinery speaks a same language and they try to become a trendsetter, I feel the private sector will definitely follow that lead.
One of your thoughts on
I
this?
think on this, see, government has few tools in their hand, right? So what's wrong with private sector earning a lot of profit, right? So if in any sector there should be a limitation on profit, government can regulate it, or they can leave it to competition, right? So I think government already has tools, and let private sector do what they do the best. And if there are specific concerns, then you regulate as much as it is necessary. I think that's how it should be done.
Regulate when necessary.
Yeah, when necessary, or if necessary, as much as necessary.
Anup, coming to you for the second question, and we've touched this in parts across today's conversation. Really, this idea that it's not just money. Money flows when other things in the ecosystem are right. And you mentioned several of these things. One of them was certainty, right? If somebody is looking to come and invest in Nepal, then there should be some certainty that, or guarantees that the investment is going to go well, or they'll be able to take the money back. In the process moving forward, how are we to respond this idea of certainty, especially given the fragility of politics that we've seen in the Nepali policy space?
From a policy perspective, I'll give you one example just to illustrate what have we been doing. So, initially in Nepal, manufacturing companies were allowed to outsource their manufacturing to other companies. And then that was the long-standing practice. This was again given a very specific reference in Industrial Enterprise Act. Then that Industrial Enterprise Act changed in next 2 years, and they suddenly did entire U-turn and then said, you can't do outsourcing for main products, you can only do outsourcing for ancillary kind of raw materials. So, the theme from here really is, how are we really thinking? Suddenly there's no logic, no reason, we don't see any policy issues as such preventing manufacturers from doing outsourcing. So that is a very important context to really look at how we've been thinking from a policy certainty perspective. Second point again is, they changed the law and then said now whoever's taken land ceiling approval, you're not allowed to give that as a security. Suddenly it comes like that. again, that is going to really affect the entire financing.
Sporadic policies.
So, suddenly somebody decides something, and it's not deliberated, it's not coherent. If we read the policy, we don't understand what is this intended for, objective-wise. So I think here, the entire trainings we all need as professionals, as policymakers, as bureaucrats, as politicians is like few things. One is we need to ask, why do we regulate? If the answer is yes, we need to regulate. How do we regulate? And then we need to ask, what is the cost for business? So if we are limiting our fundamentals to these three things, then I think we'll achieve certainty, we'll achieve a lot of things.
This has been an excellent conversation, and I would like to thank both of you immensely for taking time to sit down and have this longish conversation. Thank you so much.
Thank you so much.
I really
Thank
enjoyed
you.
this.
Thank you very much.
Thanks for listening to Pods by PEI. I hope you enjoyed Soummitra's conversation with Anup and Shreejesh, where they discussed the lessons from successful and not so successful experiences of infrastructure project financing in Nepal, and outlined policy priorities for building an enabling environment for future investment mobilization in the country. Today's episode was produced by Nirjan Rai with support from Saurabh Lama, Khushi Hang, and me, Tedon Konsakar. The episode has been partly funded by the generous contribution of V-Rock and Company. The episode was recorded at PEI Studio and edited by Nirjan Rai and Ridesh Sapkota. Our theme music is courtesy of Rohit Shakya from Zindabad. If you liked today's episode, please subscribe to our podcast. Also, please do us a favor by sharing us on social media and leaving a review on Spotify, Apple Podcasts, Google Podcasts, or wherever you listen to the show. For PEI's video-related content, please search for Policy Entrepreneurs on YouTube, and to catch the latest from us on Nepal's policy and politics, please follow us on Twitter at tweet2PEI. That's tweet followed by the number 2 and PEI. And on Facebook, you can find us at Policy Entrepreneurs Inc. You can also visit pei.center to learn more about us. Thanks once again from me, Tedon, and we'll see you soon in our next episode.